Morning, guys. We got a good one today. Oh, do we have a good one today? We've got my good friend, nobody special, who is very special in the house, and making his first appearance, the Degen King, Matt Tuttle himself. I didn't realize until the other day that he was the brains behind Inverse Kramer, my kind of guy. So we got a lot to talk about. Let me just ramble for a little bit, and Matt, I'll bring you in, and Jack, I'll bring you in a second. Let me just talk for a little bit. So I don't like to hype things. Um, Unlike in the media, they're hyping shit all the time. But I think we're really at a particularly interesting time in markets. As the saying goes, there are decades when nothing happens, and there are weeks when decades happen. I think we're at one of those. Vladimir Lenin, please call your office. Confluence of events, not in any order of importance, but the order I can remember them in. We have the AI trade rolling on or sinking, and Jack will talk about that. We had news from NVIDIA about scam Altman and OpenAI on Friday night. I think it's very important. Secondly, we had Bitcoin taking a big dirt nap. If I had told you or you had told me a year ago that silver would quadruple, gold would double, tech stocks would fly, what's Bitcoin going to do? I don't think most people would say down. To me, the price action is extremely telling. I think we're witnessing the death of speculation. And I'm particularly taken by the reaction of the crypto bro. Sorry, the Bitcoin guys. I'm always reminded Bitcoin is not crypto, etc. But they just keep mouthing the same stuff like nothing's happened. I've said it once, I'll say it again. I think there's a profound change has come to Bitcoin. The institutionalization of Bitcoin is a negative, not a positive, because it's resulting in lower volatility. Lower vol makes it less attractive to the DJing crowd. Maybe Matt can talk about this. But when you can do things like, ODTE or the prediction markets, I discovered like the betting sites, you can just blow yourself up with a push of a button instantly. Who needs who needs Bitcoin? And a matter of fact, the Bitcoin bro, they discovered now like silver. SLV was their new favorite meme stock. It's actually one of the short-term negatives for silver. We'll get to that, but I don't think anything's really changed with the precious metals. I think they're going a lot higher. Correction was long overdue. At any rate, no, I think the implied vol is a huge negative for Bitcoin. You also have, you look at the wallets and the number of long-term holders now starting to cough up some of the coins. And importantly, most importantly, the only two things that Bitcoin ever had going for it were A, the narrative, B, the price action. The narrative. Could you imagine being in a space? Let's say we're going to have a space to talk about Walmart, and they bring Jack in or Matt in or whoever, or Ryan in. And I said, okay, Walmart, let's talk about Walmart. And instead of talking about the fundamentals and they're opening new stores and what's happening to their labor costs and their new products and all this kind of stuff, all we do is talk about the price and the chart and how they have good management. The price, the chart, and number go up and number go down and they have good management, okay? That's all these Bitcoin guys ever talk about. They got nothing else to talk about. The only thing they have going for them is momentum. And I've had no position in Bitcoin. I was correctly bearish, and I was incorrectly bearish. I've been on the sidelines the last couple of years. They forced me, putting all kinds of pressure on me to buy Bitcoin back in the spring. I said I might at some point. I chose not to. I was just very conflicted. But and we're going to post a video shortly. I did an interview in December, year ahead type nonsense, and one of the things was they asked me about Bitcoin. I said no. I said I prefer gold. They said, well, it's digital gold. Well, says who? Store of value. Well, gold's been around thousands of years. Bitcoin, 16 years or thereabouts. Media of exchange, no. And you go on and on and on. The narrative keeps changing. Stock to flow model, now it's the 4-year cycle, blah, 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 blah. And what I think is really interesting right now is the fact that silver blew up so spectacularly. The metals blew up so spectacularly on Friday, which again, this shoot they'll pass. And I firmly believe that we're going to see much higher prices for gold and silver before the year's over. Don't hold me to a number. Getting direction alone is hard enough. But, do I think gold could be $8,000 by the end of the year? Sure, I do. Do I think silver could be 150 or 200? Sure, I do. That being said, could gold go to 4,500 in the next week? Could silver go to 60? Sure, it can. That's not the point. The point is you take somebody like Nobody Special, who's been on this trade for longer than I can count. The fact that we got so far above moving averages was ridiculous. So, anyway, coming back to the point I was starting to make, if someone had told you that the tech trade was going to be on fire to the upside, and gold and silver and precious metals are going to go crazy to the upside, and then you see Bitcoin do a dirt nap, hello. So, and now again, it's price, it's momentum, it's charts. Ain't no momentum, ain't no volatility. It's over. I don't know how far down Bitcoin's going to go, just like I don't know how high up gold and silver are going to go. But if you're in Vegas taking the over under, you give me 8,000 on gold for the next year or two. I take the over. Do I think Bitcoin's going to print sub 50,000 sometime in the next few months? Yes, I do. So there's a lot going on here, a lot of moving parts. Stay the hell away from Bitcoin and crypto. Run, don't walk from AI. Jack's going to talk about how that whole thing's blowing up. Okay. Oh, then you got software, bro. I'm in this one chat. It's freaking believable. So going on about the software stocks, blah, 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 blah. The chart, the this, the that. Someone's going on. There was a thing about ServiceNow or the other day, and so I look at it. To me, these are all overpriced. Each piece of garbage is more overpriced than the next one. And so I'm looking at ServiceNow. Look at the chart; it looks terrible. And I start doing some basic, quick checkup, some diagnostics. I'm like, are you kidding me? Are you kidding me? 9 times sales and 73 times earnings, and people are saying this could be a bottom. I repeat, 9 times sales and 73 times earnings. Are you crazy? And this is not business as usual. I think we're witnessing a regime shift. The tectonic plates are shifting. Go back to the Jay Pulaski interview I did a couple weeks ago. The physical is eating the virtual. Just say no to technology. Just say no to Bitcoin. Just say no to software. And the problem is, this has been leadership for so long that people are not catching the shift. But don't listen to me. Don't listen to me. Listen to the market, and the market's speaking. So, what the market's going to do, I have no idea. But I tell you what I do believe very strongly. It's an extremely high Sharpe ratio trade, and that's the rotation. Avoid the merchandise I just mentioned and rotate into energy, materials, and all this other stuff. And is every day and is every week going to be up and to the right? No. But I actually think it's an incredibly easy time for active managers to outperform the market. I think it's delicious because Mr. Market's got the sheeple exactly where he wants them. Everyone's in their index funds. 35% Mag 7 in tech. If I was running real money right now, I'll tell you the easiest way to outperform the market. Underweight tech and index everything else. Tell you a story about the late 80s. I told this before, but I'm going to say it again. In the 80s, when I was running money at Fido and had the number one fund in the country, the Japanese market was killing all the other foreign markets. My benchmark was the non-US S&P, known as EFA, EAFE. Japan got up to 66% of EFA at one point. I don't know what it is now, 10% or something like that. The Japanese market on the last day of 1989 was on 60 times earnings. You had bank stocks on 100 PE, 10 times book. But it was momentum, it was Mo, up and to the right. If you didn't own those stocks, you couldn't outperform. Well, all you had to do in the years forthcoming, there's a subsequent to that, was just avoid Japan and index everything else. I'm telling you right here, right now, with every knucklehead, oh, I gotta be in my index funds, my long-term dollar cost averaging. I can't sell it because if I do, I'm gonna have a tax. Blah, 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 blah. Run, don't walk as fast as you can from index funds. Short technology, short Bitcoin, short software. I don't care what you do, just don't buy that crap. Buy something else. You want heat? We got heat for you today. We got Matt Tuttle in the house. But before we go to Matt, we're going to go to the very special, nobody special. So with that, Jack, I warmed the stage up for you so that people have had a proper attitude adjustment. Good morning, Jack.
Morning, George. How you doing today?
Good. Spitting glass, breathing fire. All right, so Jack, I don't know where you want to go with that. If you want to go on Scam Altman first, or you want to talk about the craziness we had in the metals on Friday. Why don't we start with tech first? Okay, let's start with Scam. And you've been very outspoken. Just to remind everybody, nobody special is very special. Not least of all because when we had the stocks first blow up was after the Nvidia third quarter results, and nobody special figured out he pointed to the receivables and the inventories, and then that got stolen and went viral. Blah blah blah. He the guy. He the guy. So you've been watching this very intently. It's great. We did the podcast, you and I, the other day. You were in Spaces a couple weeks ago. So give us the update. Give us the mark to market. What's new? What's catching your eye? The floor is yours.
So I can tell you Friday was a nutty day. And everybody was obviously talking about silver and gold. I'm sure we'll get to that. But there was a couple of other very big stories that happened on Friday that I think a lot of people missed because of the blow up in metals. We had a small bank failure, not that big of a deal. But a story that broke late Friday was that Nvidia had gotten up from the table and walked away from this $100 billion circular financing arrangement that they had previously announced back in September. And the market has still not had a chance to digest that news. Considering that we're in the midst of something like a $20 trillion AI bubble, that's a big one right there, right? And mother of all Friday news dumps. We'll see what happens Monday morning if the market even cares about this. But when the story broke back in September that Nvidia was going to give OpenAI $100 billion so OpenAI can either rent or buy Nvidia's chips, Nvidia stock jumped $10 almost on that news that day. I'm assuming that's going to unwind. Now, the actual wording of the article, it was the Wall Street Journal that broke this story. They're saying that Jensen Huang had privately emphasized in recent months that this was a non-binding agreement. They actually put some text to that effect in their earnings releases in their 8Ks. He's also privately criticizing, and I'm quoting here from the article, a lack of business discipline at OpenAI, which tell me something I don't know. But he also expressed concern about competition from Google and Anthropic. So, understand the significance here. OpenAI needs cash to survive. And this whole bubble started in November of 2022 when Sam Altman released ChatGPT. NVIDIA was the chief beneficiary of that, obviously selling the hardware, blah, 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 picks and shovels, all that silly stuff. And, speaking of picks and shovels, the whole root of that analogy was the people who really got rich during the gold rush were the people who were selling the picks and shovels. Well, my question has always been, okay, there's a gold rush. Has anybody found any gold? And here we are 3.5 years later. The answer is still a definitive no. AI has not turned a profit anywhere. Only the picks and shovels guys have turned a profit. So how much longer are they going to be selling shovels if nobody's found any gold? And I think we're starting
Jack, I got to ask you, man. Do you write your own copy? Like you're on fire. Like there's wait, are you telling me there's no gold in them hills? They didn't tell me that when I was buying triple levered Qs. Are you serious? There's no one's found any gold yet.
Not that I'm aware of. And
just to be clear, Jensen walked that back the next day. He was in Singapore and came out and said that the report from the Wall Street Journal was incorrect.
Well, if you actually look at how Jensen walked it back, it was quite interesting. He came out and he said NVIDIA is going to be in this part of this big capital raise that they're supposedly involved in, right? Earlier last week, we had the story break that OpenAI was trying to raise $100 billion from Amazon and NVIDIA and SoftBank, which, by the way, SoftBank just completely tapped themselves with the last funding round in OpenAI, so I don't know where they're going to get that money from. But Jensen was specifically asked, would NVIDIA's investment be over $100 billion or be $100 billion? And he said
no.
No, nothing like that. So yes, they're walking it back somewhat. NVIDIA is going to be likely involved in this next funding round that OpenAI is negotiating, along with NVIDIA's biggest competitors, by the way. You know, Amazon and Google are supposedly involved in this too. But we,
Jack, let me interrupt. Let me give you a chance to catch your breath.
Go ahead.
You know, this sort of like they say, you know, it's they say one thing here and something over there. It's kind of like Elon Musk. I mean, you listen to all the bullshit, you know, 11 years of promising the self-driving cars and blah, blah, blah. And then we had Motorhead in a couple of weeks ago, and you look at what Tesla's own lawyers said in court in a proceeding with the DMV. In court, Tesla's own lawyers, forget about what anybody else said. Tesla's own legal counsel said, this is not intended to be self-driving. It still requires you to have your hands on the wheel, blah, blah, blah. Okay. So you read the fine print, it's one thing. It's like you read the case and accused. Then you read the bullshit they put out in the public, open mouth operations. It's like you're living in a parallel universe. Back to you, Jack. Sorry to interrupt you, but it's just I can't stand this crap anymore. Keep going.
And Tesla's a good analogy there. And you're right. The lawyers say one thing in court, and then the CEO says something totally different when he's up on stage. I would also compare this to Sarah Fryer back last fall when she was at that Wall Street Journal event in California talking about how she wants the government to backstop their debt. And then everybody, of course, is OpenAI is looking for a bailout. And then a day later, OpenAI says, no, that's not what I said. Yeah, that's literally what you said. So,
hey, Jack, is that trial balloon with a capital or small t? Yeah, go ahead.
So, you know, the fact that Jensen's coming out and walking back this story, I don't find at all surprising. Now, the one thing, and again, this is anonymously sourced, and it's kind of a pet peeve of mine when they talk about people familiar with the matter. So you do have to take this with a grain of salt. But let's assume for a second it's true and understand that is an assumption there. Just how bad must the books at OpenAI be for Jensen Huang to walk away from the table? We're talking about a guy who just last week bought $2 billion worth of CoreWeave stock. And we've seen inside CoreWeave's books just what a dead end that business model is. So whatever Jensen saw in OpenAI and their lack of business discipline, to quote the article, I can't imagine how bad it looks in there.
Maybe it's Sam's $7 million car.
Now consider this other thing. We had a story broke last week that OpenAI is talking about a fourth quarter IPO. And again, anonymously sourced articles. And I can tell you my initial take from that was that story was 100% a leak and that it was planted for a reason. There's no way OpenAI is going to IPO in the fourth quarter because they wouldn't dare issue an S1 filing. I mean, if the books are so bad that Jensen's walking away from the table, they're definitely not going to put it in print and tell everybody. But I do think it had a lot to do with Sam Altman is in the Middle East right now begging for oil money to keep his company afloat. And leaking a story about a fourth quarter IPO is a good way to tell those, you know, Emirati oil sheiks that the exit liquidity will be there later this year. So go ahead and give Sam the $50 billion he's trying to raise. And look, this whole bubble started with OpenAI, and I know Google has some promising things out there, and they have their own chips. And you know, the last round of Gemini was pretty good, but I'm not sure this bubble survives an OpenAI collapse.
Jack, I got to ask you something. In all my reading, and you forgot more about this stuff than I'll ever know. I saw a blurb. It was one smart dude in one of the comments on X, and you'll know if this is true. Or if you don't, you'll check it out real fast. He said something to me. He put something like OpenAI. So Microsoft, you know, their numbers, the stock blew up last week because we can get into that later. But the really relevant point for what you're saying, he pointed out that I think Microsoft is carrying OpenAI's on its books with a valuation of like 100 billion. And so, as opposed to these other numbers that are bandied about of, you know, a trillion or whatever, is that right? 100 billion is what the implied valuation is of OpenAI in the Microsoft books.
I can't speak to the 100 billion number, but what I can tell you is that in Microsoft's latest earnings release, there was a revaluation of OpenAI. I can't tell you what it was from or to.
Yeah.
But that revaluation added about $1 per share to Microsoft's earnings, where historically Microsoft had been reporting a share of OpenAI's losses.
Right.
In this
Right.
quarter, it actually was a big addition because of
Yeah.
the transition to a for-profit
Hey,
company.
hey, while you're talking, Jack. Hey, Ryan, can you run that down? I think there was a. I know you can find that stuff. There was.
Yeah, they also they also came out and it found out that Microsoft had used OpenAI to account for like a large percentage of something that had to do with future growth. I'll look it
Yeah,
up.
yeah,
But
yeah, Ryan. The number I really want to know is I want to know what it's on X. You can find it real fast. I want to know what valuation Microsoft is carrying OpenAI on its books. So if that was disclosed, I think in the recent quarterly results. All right, Jack, back to you. Go ahead.
So what Ryan was just referring to there was Microsoft reported a nearly 100% jump in their remaining performance obligations. And that's basically, we're going to take all the sum total of all these spending commitments that companies have made to us, lump it into one number, and report it as if this is what our future revenue could be. And the entirety of that 100% increase in RPOs was spending commitments from OpenAI, which OpenAI does not have the money to pay for. We saw this exact thing with
that's right.
Oracle last fall. Oracle stock made a huge jump on that news, and it's done nothing but head south ever since. So remaining performance obligations is the trust me, bro, of financial reporting metrics. You should put no stock in it whatsoever, especially because the people who are claiming this don't have the money to meet the obligations. And if this story about Jensen getting up and walking away from the table is true, they're not going to have it anytime soon.
So it was 135 billion on their books, which is a 27% ownership stake.
So that'd be like 500 billion. And Jack, what are they talking about? Like,
Correct.
are they talking about $1 trillion valuation or some crazy number like that?
So if they're carrying 135 billion at 20% stake, that's a $500 billion valuation, which I believe
Right.
does match their latest funding round. So that makes sense.
Right. Okay.
But there was some IPO projections that it would IPO at around $1 trillion.
There you go. And meanwhile, their annualizing revenue, it was at 15 or 20 billion or some crazy number like that. It's like, and then the losses are as big as the revenue. I mean, it's just complete insanity.
Yeah,
And
they love to talk about, revenue run rate or annual recurring revenue. They take their most recent month and multiply it by 12. You never hear a lot of talk
So
about profitability, though.
Jack, basically what they did was they were saying that in the earnings report, if I'm reading this right, so they recorded that 7.6 billion net income boost that you were talking about earlier that was tied to that investment, but that was basically because it was driven by a dilution gain from their recapitalization.
so wait, so how much does that add to earnings, Ryan or Jack?
It was almost $1
Uh,
to their earnings, right
It's
around.
almost $1. You said.
Yes.
As Shakespeare once said, the quality of the quality of earnings is not strained. Anyway, all right. So Jack, let's keep going because I want to get to Mathew. All right. So AI, no bueno. Maybe if you want to talk about crypto, fine. If not, fine. I know you want to talk about silver and gold. So give it a bit more of a rant. Get the Degen King in here, and then we'll open up the questions. So what else you got for us, Jack?
All right. So let's talk about metals, especially in a context of AI and what AI could do here. All right. We just saw the single biggest sell off in silver history on Friday, right? Silver went vertical, got way out over its skis, and we saw a massive deleveraging on Friday. And I think if there's one thing we can learn besides don't chase from Friday, it's just how quick leverage can kill you. And we've heard a lot about all these Six Sigma events that have happened in the metal space in the last couple of days, and now I think we're up to a 10 Sigma event, which is like one in so many septillion. I think the point of the whole Sigma argument is that we need better Sigmas, right? We need to throw out some of our assumptions about what is and isn't possible right now, and metals just showed us that. And so,
So Jack, like in the Jaws movie, you're telling me we're going to need a bigger Sigma?
yeah, we need bigger Sigmas, right? We
You need a bigger
have
Sigma?
this
Okay.
we
All
have
right.
this
So
mental boundary of our thinking of what is and isn't
yeah. So
possible.
I just want to let you know my Sigma is bigger than your Sigma. Okay, that's one. And then two, I just want ask you for a friend, Jack. I'm gonna play with you a little bit here. So, and I think I forgot to mention this in my opening rant. Uh, hmm. I got a friend who's this is a joke, Jack. Okay, play along. I got a guy. I know a guy who he's big in crypto, and he's using a lot of leverage, and he's got a little bit concerned when he saw how silver went down 35% in one day. Should he be concerned? Like if he's doing one of these 20 to 1 or 50 to 1 leverage deals from his crypto broker, like what should I tell him? Does he have grounds to be concerned?
I mean, why would he be concerned? It's not like 3 months ago you could take some penny stock with a dead business model, rebrand it as a shitcoin treasury company, and watch the stock rally 1,000%, and then say you're going to borrow money to buy, melon coin or whatever. Well, why would we be concerned about that?
No, yeah, nothing to see here. Move along. I got it. Okay. All right. So Jack, let's get into the silver gold thing. Like this is not normal what happened. So and there was a great thread. I someone put it up. I reposted it. It was going on about the 10 Sigma event, all this kind of crap. Like this is not normal. Like I think there's a fingerprints of the establishment, whatever, trying to help this thing along. So talk to me about your thoughts about what's behind Friday and what does it mean?
Look, it's real easy to just create this evil entity in your mind and say they're against us, and that's why the thing that I own went down
Uh-huh.
in value. I mean, anybody can do that and then
Sure.
convince themselves they were right, and it's okay that they lost money. The thing rallied. It's a safe haven asset, and it rallied like 400% in 2 years. Of course, this sell off was overdue. You know, are they kicking us while they're down? Yeah, I mean, there's another margin hike coming first thing tomorrow morning. CME just announced it. Bob Coleman was nice enough to post that late on Friday, which is another reason Friday was just
Yeah, and
news
I'm
dump.
going to interrupt you again. Coleman's in the house somewhere. Bob, raise your hand. I want to get you up here. Keep going. Keep going, Jack. Go on.
Uh, there was just so much leverage built up, and all the gold bugs and the silver bugs have been pointing to China and saying, "Look at all this demand in China," and that's why gold and silver are going to be, whatever ridiculous number, 50,000 by next week. Or we just had a big blow up of one of these Chinese gold brokerages that I can't even pronounce the thing, but this gold platform that was allowing people to leverage up to 40x and buy in. Well, now people can't get their money out. They're not delivering any of the metal. The cops came in. There was a big brawl between people who wanted their money back and the cops who came in to basically unwind this gold trading site that just blew up. And I think it's $1.4 billion in losses are just going to go up in smoke. And it just shows you how over leveraged the trade was. And we could say it was this big evil cabal of banksters, and there's people blaming, oh, they all happen to be of one religion. Or we could just say everybody went cuckoo for Cocoa Puffs. They took it too far, and the market corrected.
Right,
I'm
and
inclined to believe that.
one could also say it's not either or, it's both. I.e., the market got way over its skis. We agree on that, but the regulators are also kind of watching this. Not that they did anything necessarily, but they're not exactly crying over the fact the market's correcting. As a matter of fact, maybe they'll help the process a little bit more. As you rightly point out, you know, margin call increase inbound coming. So maybe it's a little bit of both.
Can I
Yet
have an
no circuit
observation too?
breakers on the way down.
Hey,
I mean, that's
Ryan,
no.
could you just hold it because it's hard to hear you? Just hang there, Ryan. So go on, Jack. Keep going.
I'll just drop two more things and then I'll stop on
Yep.
metals. No circuit breakers on the way down. That's noteworthy, right? The protections are only when it's going to the upside, and no cooling issues at any data centers when metals are going down, like we saw back on Black Friday when metals were going up in a straight line. So, you know, I guess we'll feed the tinfoil hat a little bit. All of these accidents that seem to happen when things are going up don't ever seem to happen when they're going down.
Awesome. So, Jack, stay there. And Matt, if you don't mind, I just want to give you a couple more minutes rest. You're warming up in the bullpen. I want to bring Bob Coleman in now, our man on the ground for all things gold and silver related. Bob, you're out there in Idaho, right, or wherever you are, somewhere out there.
I feel like that movie War Games where they're waiting for all these bases to say, "Are you still there?" After the global thermonuclear war thing, and I'm sitting here in the bunker in Idaho, going, "Yep, I'm
All
still
right,
here."
Bob. Okay. So, give us your highly differentiated, non-Captain Obvious insights. Like, we're not, I read all the stuff and people point out, silver's collapsing, big deal. Silver's crashing to not levels since January 10th or whatever it is. Meanwhile, the premium on physical is still to the moon, blah, blah, blah. So I know, I mean, you won't have a problem with this. Jack won't have a problem with this, but the normies out there would be like, what do you mean it's nothing's really changed? Well, fundamentally, I think it has changed. So but that's just me. Bob, what's noteworthy for you? What catches your eye about what's been happening the last few days since you were last on here?
Yeah, I appreciate you having me on, and definitely Jack and I we did a, podcast. I guess one of our live emergency specials on Friday afternoon. So kind of went through a number of this stuff. But yeah, I had a chance to kind of digest some stuff over the weekend, or at least Saturday. And there's a lot of good stuff out there, and there's a lot of crap. But what kind of caught my eye on Friday was this was forced selling. This was a y- uh, basically no bid type of scenario. And for guys that like us have been in this markets for plus 30 years, when you see this kind of stuff, it's panic, it's leverage unwind, it's options driven, it's funds pressing on one side or the other, and the other fund, the guys that are weak are just getting absolutely slaughtered. What was interesting was these ETFs, these 2x and 3x levered ETFs, and part of that caused a lot of distortion. You know, like you mentioned and Jack mentioned, we got very levered on the upside. You looked at volatility, VXSLV, you looked at GVZ, all those types of things. Volatility was just through the roof. You had option guys just piling on and pressing their trade, further and further, and you had gamma squeeze to the upside, and all of a sudden you had this, the 2x levered funds were getting a crap load of money. I think it was it was like $5 billion or $4 billion was loaded up, or $5 billion was loaded up in a 2x silver ETF. And so that was $10 billion of long futures contracts that all of a sudden, when everything starts to unwind, uh, you know, that's selling at 2x, not at 1x. And then you have guys that are piling in trying to hedge their side, and so they're piling in on the inverse ETF. So you double the amount of selling on double the on these 2x ETFs. So that just accentuated the move to the downside. And then and there were some awesome posts over the weekend that kind of explained all this. Talked about how, for guys that have been in the business, again, the open outcry session closes about 1:30 New York time, and these 2x levered ETFs happen to have a pricing a time around 1:25, 1:30 East Coast time, which is the old open outcry close. And that's where the bottom, I think, came in. So basically, they were forced sold. And I think what happened was when the CME put out, Friday night, when I posted the increase in margin maintenance requirements and so forth, I think they may be focusing at these ETFs. I don't know if it's it's obviously going to increase maintenance requirements on the short side, as well as the long side, because it's all percentage basis. But I think they're trying to get control over this ETF market that is just absolutely levered to the hilt.
If I could add to one of the things that Bob just mentioned, and just to put this in comparison to stocks, if you look at the top 10 biggest single day gains in Dow Jones history, 6 of them happened between 1929 and 1933 during the biggest stock market crash the world has ever seen. So I kind of think we're probably going to see more days like this. If you zoom out on the chart in the long run, I think gold and silver, the trend is going to be higher for all the underlying reasons that are pushing it higher. But we are going to see these big deleveraging events along the way, similar to the big gains that we saw during the Great Depression. I think we're seeing the inverse of that in metals markets now.
Well said, Jack. Well said, Bob. So if you got Bob, is there anything you want to add right now, or you just want to hang around for Q&A?
Yeah, I can hang around. One thing, and this is something that I think it's important also to note, is people that there's a difference between investing in physical silver, which is what I do, and playing the options and the ETFs and miners and so forth. There, you're playing price, because you really don't have any direct ownership, or you're not a legal owner of whatever that underlying metal is held in a vault in, with the Royal Canadian Mint, or over in London, or over in New York. So I think that the public has to rethink, I think, a little bit of how they invest in this market. Yes, you're going to have traders that play the options markets and want the hot money, the momentum, and that type of thing. But I think what could transpire from all of this, and this is something I've been very, very uh, focused on since the early 2020s, ever since Basel III, is that the market, if it goes to a physical driven market, the physical price will start to dictate the price discovery, and that's what kind of started back in 2022 and 2023. That's what I would like to see. If we're going to go higher from here, you want to see less dependence on leverage and more focus on the physical. So just a but we can talk about in the Q&A.
Awesome. All right, let's hold it right there. So Matt's been warming up with the bullpen for a second. I feel like we gotta give the Sandman introduction, Matt, but whatever. So my new best friend, the Degen King himself. You want to know who the guy is behind Inverse Kramer, Inverse Nvidia, Inverse this? He's actually kind of a normie. I had coffee with Matt on Friday, but I didn't realize that he was the Degen King. So hey, Matt, good to see you, man. What's up?
Thanks for having me, and I hope that nickname doesn't
Well,
stick.
all right, we have to do some branding here. I know you're trying to get respectable, but all right, I'll come up with something else. So hey,
No. That's fine for Twitter. I just hope it doesn't go
no, I got
anywhere
it,
beyond Twitter.
I got it. All right, so Matt, you brilliantly have capitalized on all this craziness with your sweetie ETFs, and whether it's the crypto related nonsense or some of the crazy tech stuff, core weave, whatever. It might be useful. Could you just explain a little bit? I'm curious. You've got and also you got that banger of an ETF. You don't just use short only. You got long only, but you do offer the juice, the high voltage stuff. So, I guess to start off, like when you look at, we heard Jack and Bob talking about dislocation in the markets, and they got to go sell the silver and the lever, the whatever. So maybe just sort of mechanically, just talk about like maybe what you saw on Friday and what tends to happen when markets start to go bid only or offered only. Like the selling or buying that occurs is just completely price indiscriminate. No, so it'll just pour gasoline on the fire in terms of whatever direction things are going. You just talk a little bit about that.
Yeah, and I really hope Bob was wrong. I mean, he probably wasn't, but I hope he was about 2x ETFs impacting the market. We're always arguing to the SEC they don't, and we're trying to get 3x approved. Um,
Wait, you're trying to get 3x approved?
well, yeah, we're trying to get 3x approved. And technically, I could do 10x within the rules. I mean, I won't, but I could. I can also do 3x within the rules. The question is, does the SEC tell the exchanges not to list it? Which
Matt, let me
is
ask you a question. I'm always interrupting. You know that about me.
no, it's
No.
fine.
So, like, maybe not you, but you look at your competitors and the other guys out there. What's the most toxic brew out there right now? Is there a 5x on anything, or is 3 the limit so far?
No, so on single stock, it's 2x. The 3x's that are out there were grandfathered in. So technically, you can't do a 3x now. We have an argument into the SEC that I think has legs that would allow us to do 3x, but then I've got another way to do it that falls outside of the rules. But we want to make nice with the SEC on that path because we don't want them telling the exchanges, "Hey, don't list
Hey
this."
Matt, hey
Or
Matt, I got a better idea. Is the 3x guys that are out there right now? Are they like small funds or big funds? What are they?
no. I mean, the you mentioned like the TQs. I mean, that's a 3x. Direxion and
Right.
ProShares and those guys, they were doing 3x before the rule change. Now technically you can't do it, but everyone, us and Defiance and Granite and and Themes, everyone in the space who's got 2x is now trying to get 3x, and we're all coming about it slightly differently, and Now it's basically an arms
Hey,
race.
Matt, hold on a second. Hey, Jack, Ryan. Sounds like Matt's like your local dealer. Like, the THC content in his shit is better than anybody. Everyone's bragging about my shit's stronger than someone else's crap. I mean, wow, this is crazy. Matt, let me ask you a question. As a matter of
Yeah.
I mean, okay, fine. So, like, I know, like, the feckless SEC doesn't enforce anything anymore. And so I'm not going to ask you, like, what can you do? From the standpoint of public policy, like, I mean, I get it. Like, if they're going to let people do this, fine. But like, how is this helping society by letting people blow themselves up on 3x stuff? I mean, to me, that's craziness.
So, I push back on this from the standpoint of these are tools. And even without 3x, there's a bunch of ways you can blow yourself up. I mean, look at futures, look at options. Blowing yourself up has been happening for as long as markets have been happening.
So you're the public advocate. You're protecting the right of people to be able to blow themselves up however they
I mean,
wish. Is that right?
I'm a libertarian. I hope you're going to use things smartly. So listen to you and listen to these other guys and be careful with what you
Oh,
do.
Matt, let me tell you. So you're one of these guys like into politics, but like, actually, I'm gonna be with you on this one. It's like guns don't kill people; people can kill people. Is that the idea?
I mean, exactly.
This is starting to sound like a pharma commercial. Women who are pregnant or may become pregnant shouldn't use 3x leverage.
This is the value added content that you all come to my spaces for. All right, Matt, keep going. So, all right, so you work on. All right, so now let's get back to. Let's try to get serious. It'll last about 1 minute, I know, but this stuff acts as an accelerant on both the upside
Yeah.
and the downside, right?
So there are structural things where, we've got to, on all of our 2x and everybody who's 2x, everyone who's 3x, their daily reset. So we got to get back to 2x by the end of the day. So really, that 345 to, 410 window, we're either forced buyers or forced sellers. And on a day where there's a big move, yeah, I mean, we could be in the market selling a ton, buying a ton, and there's no decision
Hey,
making to it.
all
It's
right,
I gotta buy, $1 billion worth of micro strategy.
right. Okay, so Matt, stay with us for a second, just so the people's. I know you know this, but I want everyone to understand this. So let's say we're talking, SLV. I'm just gonna use that as an example, all right? So let's say you got an ETF that's got a billion in assets, 2x levered SLV, right? And so you got 2 billion. You're long 2 billion of SLV. The NAV is 1 billion. Okay, fine. So then let's say SLV goes down 35% in one day, like it did. So all of a sudden, the 2 billion is only worth a billion 3. So you just took a oh my God, I can't believe this, but I know the numbers are right. You just took a seven. Stop me, Max. By the way, I can hear you laughing, so it's okay.
Yeah.
So let me get. Listen, I'm not too good with numbers. Forget about the fact my father was a theoretical Princeton mathematician, worked with Einstein, but I digress. So you lose 700 million on 2 billion. So the NAV goes from it says the NAV goes from a billion to 300 million. So the NAV is down 70%. But the problem is you're still long a billion 3 worth
Right. You're
of.
you're you're a forced seller at
Yeah,
that
but
point.
you're four seller in size. So you got to go from a billion 3 down to 600 million. So even though the price is down 35%, you have to sell 700 million of silver each of SLV just to stay 2x leverage. Did I do those numbers
Right.
roughly correctly?
Yeah, and the marketplace knows you're a forced seller.
Like Matt, as they say, what could possibly go wrong? All right, keep going.
Yeah, I mean, there's a lot that could possibly go wrong. We've never had an issue except not last November, the November before when MicroStrategy went parabolic. That November was a tough month.
So when it went parabolic, you were a forced buyer, right?
We were a forced buyer, but then the problem is, all of our counterparties walk away. So we ended up having to go into the option market. And again, everyone knew we had to go into the option market. Our counterparties were in the option market hedging. So we're buying options at ridiculous implied
So
volatility.
your counterparties must love you. You are the gift that keeps on giving, or I should more properly say, your shareholders are getting fleeced and they're just getting totally destroyed.
Oh,
No,
no. I mean, it depends on the product. I mean, we've got two X's on names that have gone up a lot. And
right?
again, the hope is that people who are buying 2X are trading them. And we see that. So, like, we'll see counter trend. So, we'll see, micro strategies up big, people are buying the short. And then MicroStrategy goes down big, they're selling
Okay,
the short, they're buying the long.
right.
So
By the way, I didn't mean to be unfair. Like, of course, these are tools used properly. They can be really helpful. But the point is, at the turn, you can get caught if you're not careful. No.
well, yeah, I mean, again, with everything in the market, you've got to be educated, you've got to know what you're doing. And we do a lot. I write a daily newsletter on thematic stuff and on hedging. We're going to be coming out with a hedging ETF that's going to blow everything away. You got to be smart with what you're doing.
Got it. All right. So, wow. All right. So, can you speak to what you actually saw at the end of last week with the metal stuff? In fact, did you guys, aside from you had to sell because you're levered, were people buying or selling your metal ETFs? I mean, I'd be very careful because they could be buying or short. Were people increasing or decreasing their long exposure to metals on Friday?
So we don't have any metals ETFs except we run an ETF. The ticker symbol is BEGS, Bitcoin, Ether, Gold, and Silver. So, talk about the four things that you didn't want to be in on Friday, where that ETF is 75% Bitcoin, 25% Ether, 75% gold, 25% silver.
Oh boy.
Yeah. Oh boy is right. We didn't have inflows or outflows. Obviously, we got our ass kicked, but we didn't see anything meaningful from a volume standpoint, on that. And we're not in the 2X silver, the 2X
Okay.
gold.
So let me zoom out a little bit more. Forget about last week. Let's just talk about the last few months. The last, I don't know, 2, 3, 4, 5 months. What have you been seeing? Like, what's flavor of the day? What are people gravitating towards or away from?
So, a lot of people going to BMNR. So, I know that's got to be one of your
Matt, I'm
favorites.
sorry. BMNR. Remind me, please. I haven't had enough coffee. What's BMNR? Is that?
Oh, that's Tom Lee's.
Oh God.
Yeah.
And what's in that? That's not Granny. What is in BMNR? What's in BMNR?
No. BMNR is his Ether DAT.
Oh my God. All right. All right.
Yeah.
Keep
So
going.
we run a 2X on that one. So we've seen a lot of interest there. We do 2X Nvidia, a lot of interest there. We do 2X long and short Tesla. The cool thing about Tesla, we do a lot in Korea. The Koreans love the long and the Americans love the short. And, we've got both sides there. A lot of inflows recently into our 2X Google. Um, those have been,
Yeah.
yeah, BMNR. Robinhood's another one. We've gotten a
Yeah.
lot of inflows in, a lot of inflows out of MicroStrategy.
Yeah.
Um,
Matt, let me ask you a question. Charles, hold on. I'll get to you in a minute with a question. So, Matt, let me ask you this. I remember at Fido back in the day, we had the select funds, the sector funds. As eminent philosopher Yogi Berra once said, you can observe a lot by watching. So you kind of like, you look at where the rats go in the maze, and like initially it's fine because it's FOMO. They chase whatever's working, right? But then eventually there's too much of a crowd on, second base, and so they'll get blown up. So are you able to kind of watch the way the rats run around the maze and try to figure out, okay, there's too many people here, or this thing's starting to move and nobody's there, somebody's going to plow in. Like, is there any, you get any signals from watching the flows? And if you do, what do you look at right now? Like, are there certain things that, I mean, for instance, you should talk about your European defense thing, which has been a home run. Like, I don't know, maybe there's too many people in that and it's stalling it. I have no idea. But the general question is there, is there anything to be gained from looking at the flows and where people are going? And, it's always flows follow performance. So any thoughts about that?
Yeah. So what I see in our 2X for the most part is counter trend. So, on down days, we're getting inflows into our long products. And on up days, we're getting inflows out of the long and into the short. What I see on EUAD is, unfortunately, I mean, we came out with this thing at the end of 2024. I was pounding the table for it, and we really only got inflows when it was already up 70%.
And, and just so people know,
Um,
EUAD is the European defense thing, right?
yeah, European
Okay.
aerospace and defense. We were the first to that theme, but I think the difference is European aerospace and defense is financial
Right.
advisors who are going to buy stuff at the top, whereas our 2X stuff are traders, and the traders are coming in and they're buying the dips and they're selling the rips.
Got it. Okay.
So, it's really, we're seeing flows that we would expect. I'm a trader myself. I typically like to fade certain things, but I like buying the dips and selling the rips too. So it's just really, along the same lines, typically how I'm thinking. Occasionally, like I'll see a big inflow into something and be like, oh God.
Okay.
Yeah, I don't think that's a great idea.
So let me ask you this. This is not, your official view, but just you, private individual. Like right here, right now, for the folks in the room, looking at the next few weeks, not next few days, or not next few weeks, next few months, or looking at for the rest of 2026 as a year as a whole. Like anything in particular look interesting to you, or I don't know if you're compliance constrained in terms of what you can say, but like for instance,
Oh
for
yeah.
instance, for instance, I think Tesla's an outstanding short. I know I've been too early on it, as have others, but I think this is the year for a whole bunch of reasons. I don't know if there's still a lot of people on the Tesla long side or the short side, but I don't know what if folks wanted to speculate. Not that we ever do that, but if folks wanted to exercise the right to blow themselves up, this is a joke. Like what would you where do you think makes sense? Like PA, where would you be looking to put money for the rest of 26?
Yeah. And, just so you know where I'm coming from, we write a daily trading newsletter. It's free, it's on our website. I used to be a very active trader. I don't have time anymore. I used to love being on the short side. You've got to be watching shorts like a hawk. So I don't do that anymore. I do tell people you should always be hedged. And I think especially now that you've got zero DTE options, there are ways to go to bed every night with hedges on, which is something I do. Areas that I'm looking at, and, we talked about this a little bit on Friday, and I'm going to write about this on Monday, is European digital sovereignty. The European aerospace and defense trade to me was obvious. Hey, Europe, you're on your own. Where are you going to spend money? Are you going to give it to Lockheed Martin? Or are you going to give it to Rheinmetall? You're going to give it to your own guys. And you're seeing rumblings now, and there were like 3 articles over the weekend about Europe worried about, being tethered to the US when it comes to AI. So, that's something we're kicking around. The Asian defense trade is something we're kicking around. Um, the old economy stocks that are using AI to actually, increase profits. I think someone mentioned this earlier. I think we're in the early innings on AI, but at some point, someone's got to make money. So one of the things we're trying to beat the bushes on is, all right, what old economy companies are implementing AI and can be making money off of that? So those are the areas that most interest me at the moment.
Got it. All right. Why don't you just hang there, Matt? I know there's gonna be a lot of questions. This was on fire. Boy, we got to space this one between Coleman and Jack and you. This is really lighting it up here. So I'm gonna go around the horn here quickly. We're gonna go to my friend Mark, and then after Mark, we're gonna go to Anti Thetos. Hey, Mark, good to see you. What's up?
Hey George, hey everybody, great space. My history. Matt Tuttle and I used to chat a fair bit when I had my ESG orphans. He was definitely a shrewd advisor and smart talker in that space. So I really respect Matt.
Newman, I didn't know that about you. I can say this to you as a brother. You're a schmuck. Why you decide to stay on your own and not connect with Mathew? I don't understand. Keep going.
So what I can say, Matt has always had his finger on the pulse and really, knowing where the ball is going, the puck is going. So props to Matt. I just wanted to, take a little bit of a macro view on the evolution of these types of products because in the dispersion history, right, single stocks versus index, right, that was always the trade for the vol quant guys. And I think what's happened now is we have every month, every couple of weeks, the buy on dips sort of 401k money that keeps rolling in, plus the threat of QE is always sort of there, keeping the indices right there nearly at all-time highs, a lot of these. And vol continues to stay in the sort of low mid-teens, whereas these single situations, whether it's single stocks or in the individual metals we saw, right? Volatility explodes. So there's that idiosyncratic existence, if you will, in these single names and these levered products, which creates a opportunity, but also heightened risk. And I think that when the zero interest rate policy ended, call it a few years ago, right? Um, these levered funds sort of took the ball and said, we can still play the levered game and allow people this sort of extra juice in speculation. While George, you mentioned it, the SEC has been a bit neutered. It's more like, and as Matt alluded to earlier, sort of caveat emptor, buyer beware. Here's your opportunity. And I think it's interesting, right? Because just for a sec, Pete Rose, right? The whole Hall of Fame thing, gambling, sports, etc. And now you have a guy like Wayne Gretzky pitching. Where's the puck going to drop? Who's going to score the next goal? So we've evolved into this society of like, hey, you can take a risk, you can take a swing. And I think that's the speculative nature underscored by like the crypto existence. So with these double and triple levered, I find them to be trading opportunities, not investment opportunities, right? And where you can, capitalize on an extreme move is really super important, but also super risky, right? And it's definitely a caveat emptor. I mean, these double levered, triple levered, they have a daily rebalance, they have a cross the bid ask, they have a roll risk. So they do historically trend to zero without a directional trend. And what I think really is important going forward here is the focus on alpha versus the focus on beta, right? And beta we know is the market, right? And the alpha is what can you do in sort of idiosyncratic situations to enhance returns. And I think there is a place in the portfolio for these double and triple, but I do think that it is a trading sardine, not so much an investing for me personally. I mean, everyone has their own risk management, but you can see how the Greeks get in control of these situations when they run through strike and they extend a certain way because it creates this, oh my god, I have to sell, I have to buy.
Right.
And I think that that's a case where we collectively investors need to be careful because there's always liquidity
Right.
until there isn't.
Right.
And that's what I'm gonna
Yeah.
leave here as my
Yeah.
thoughts.
So, Mark, we haven't talked for a bit. As long
We
as you're up
haven't.
here, you always got a good nose for things. So I don't know if you were in the space at the outset, but I was kind of tying stuff together. Crypto taking a dirt nap, the AI trade unwinding. You had this, I'm losing my software stocks have been, one way down. Then you had the metals blowing up, on Friday. I happen to think, I mean, you and I go way back on the metals. I know you were very long. I know you think you took some profits, whatever, but I'm just sort of the trader in you. What are you thinking on the tech trade? What are you thinking on crypto? And what are you thinking on metals?
Right. So on the crypto side, I I I I don't have a position. I haven't had a position in years. I think that this is part of that speculative nature that we're seeing, and everyone taking that extra risk. The amount of stuff in my feed, and maybe it's just because that's the path I'm traveling in, but there are so many people who seems like they're talking as if their livelihood depends on the crypto world, and I think that their livelihood does. I don't know. That's my instinct. So I think that we're in the beginning of the end of the speculative crypto cycle. That's just me. On the metal side, I think this is a pullback retracement on something that's still early, because I do think that the people going to the silver dealers were sellers of the metal. I hear everyone, I'm selling, I'm selling, I'm selling. That's not what happens at the top, right? That's what happens when people are just taking profits, don't know what to do. So I feel as if there's still some trade here. I personally, I was in this dust, which is a double levered. I was in this dust last week because I've had such big moves in the underlyings that now I got smoked on the underlyings, but my dust did okay. I think I'm peeling out of the dust this week and just waiting to see on the rest. Overall, I think this is the year of revelation, and I don't mean four horsemen. I mean the curtain's going to continue to come up. So I think that portfolio insurance here is still cheap, and I just the Ouija board's trembling a lot in a lot of places. The first month of this year was volatile in certain spaces, and I think that's going to continue.
So Mark, I think we're in the beginning stages of witnessing the death of speculation, and you're pointing to all these things. And you know this as well as I do. When FOMO, when momentum, when the charts, when price is the main driver. Remember, go back to our Japanese days, Mark. That saying, to know and not to act, not to know. It's sort of like why do you buy Nippon Steel? Because it's going up related, right? No other reason. Okay, why do you buy low price stocks? Why do you buy Tokyo Gas? Okay, it's the momentum, all right. And what people don't, and so what happens? You buy it because it's in motion. Once it's in motion, the item loses its attractiveness, and to me, it's a complete reflexive thing. So I look at crypto as an example of that. And the thing I'm banging away with, and I don't know if you heard me, but I want to run this past you. It's the volatility. It's the action itself, which is the inherent attractive, which gives the item the inherent attractiveness. And when that goes out, so when you have the institutionalization of Bitcoin, that by itself makes it less interesting because the vol comes down. The Degen crowd wants the juice, they want the action, and now it's like, oh, SLV's got triple the volatility of Bitcoin, right? Or I can do zero DTE, or I could blow myself up on FanDuel or DraftKings. So I think Bitcoin uniquely benefited from that. Was like the Degen instrument of choice for a while, and I think the tide's going out on that. What say you?
Yeah, I mean, I look at my read on Bitcoin. Forget the other coins because there's a million of them. But my read on Bitcoin is that's the speculative nature, the level of speculation in the market is what is Bitcoin doing?
Mm-hmm.
And it feels like, I mean, I put this out on, I guess, on Friday. I don't have a position again, but I think that 80,000 level was the neckline on a weekly head and
Right.
shoulders for 25. And so at this point, I think you sell everything up to 80K and you're looking for 40K. Again, I don't have a position. That's the speculative trader in me. And I think that speculation, you're right, George, is slowly coming out of this market.
Yeah, no, I agree. I did a great podcast everyone should watch with Dave Nikoski a couple days ago, and he got me when he used a term I hadn't heard before. You're going to love this one. We started talking about tech, and he was saying there's leakage in tech, and he goes, it's an illustrious sector. And I'm like, what? And I think I pronounced it right. He's going on about the chemical they put in the potato chips like a few years ago. It caused leakage or something. I don't know. People would, whatever. And so he goes, there's leakage in tech and all the other stuff. Jack, you're laughing. Jack, you know what that's all about? So Mark, hold on. Jack's an expert on Olestra. Jack, what's the story on the Olestra thing? I didn't get it, Jack.
I just remember one time in college, I had no idea what Olestro was, and I bought a bag of those chips at the cafeteria, and everybody at the table started laughing. And then I read the fine print on the bag, and the warning on the bag was that these chips may cause anal leakage.
Oh my God.
What marketing?
They got pulled from the market because of that.
We gotta keep.
Oh, I thought it was just
We
me.
gotta keep it a family channel. All right, thank you, Jack. I know I can always count you for the value added insight. All right, Mark, back to you.
So
Mark, go on.
one last thing I'll just leave. Well, I'm on the tech related, right? George, you and I are old enough to remember in 2000, okay, between 2000 and 2015, 15-year period, Microsoft and Cisco, biggest companies at the time, saw their revenues jump 4x over that 15-year period. Microsoft stock was flat and Cisco lost 50% over those 15 years. So look, we know, George, like this seems cyclical, and AI and all these things, the revenues you could forecast revenues to the moon from here. But I'm not. I have very little in tech. I'm underweight tech, like a dummy. Like a dummy, I try to short the Qs a few times and have mostly lost. But I'm not in tech. I think energy and commodity stuff stays is where I want to be for this year.
All right, excellent. Let's keep it moving here. We're going to go to Antithetos and then Illini. Antithetos, did I pronounce that right? How are you?
Yeah. Hey, George. How you doing?
Good to see you.
All right. So my question is for Mr. Tuttle. So if we go back and look at some history, right? Even going back as far as maybe a year and a half ago, the Asians in particular, have a penchant for sometimes risk taking, as we all know. And if you look at the factual data behind that, it's not a loaded statement. You can go back and you can look at various ETFs, particularly levered ETFs that are U.S. domiciled. And what we saw was significant ownership by the Asians and particularly the South Koreans in as much as 40% of 2 and 3x levered tech ETFs here in the United States. Currently, the last data point that I saw was an article that came out right at the end of the year, and it said that they're averaging around just a little over 20% of our levered ETFs currently. So that's a pretty significant ownership. So number one, what I'm trying to do is find out what you're seeing within your family of funds, and if you're seeing similar percentages, if that's something you can share with us. Number one, and then secondly, to follow that thought, this week we just saw the South Korean regulators say that for the first time in history, they're going to permit, most likely, if this goes through, single stock levered ETFs within their own country. So my question has to do with the idea that are they still taking risk in the funds that you see, number one, and two, if so, what are the risks if they start taking their dollars from traditional U.S. ETFs and moving them with this potential approval process to their own? In other words, they would be buying SK Hynix or Samsung 2X type ETFs as opposed to coming into the United States and buying a 2X Micron.
Yeah, so we see numbers on a monthly basis, and we're pretty much around there. I mean, it's about 25% are the numbers we're seeing coming from Korea. We have a guy on the ground there. He thinks that is going to get passed, and you're going to have a 2x Hynix and maybe some of their other names. I'm not worried about them getting out of the US names because they still love the US names. I mean, they love Tesla. I would guess, and I don't remember the numbers, but our 2X BMNR is probably more than 25% Korean. They love Tom Lee. They're not allowed to buy spot Bitcoin ETFs, but they can buy as much 2X BMNR and 2X MicroStrategy as they want. Just one of those many rules that makes absolutely no sense. But we're doing a lot in Korea. I was there last year. I'm sure I'm going to be there again this year. And yeah, I don't think anything is changing short of a massive bear market, which is a whole different story.
Do you know why those have become so popular in Korea? Because they turned it into a sport.
Well, yeah, they're not allowed to gamble either, so this is their gambling.
They literally turned it into a sport. They have arenas built around watching people trade these all day.
Oh yeah, I mean it's a different environment out there. The YouTube influencers control a lot. It's a different world. I mean, I had a great time out there. I was out there a couple of months ago. I can't wait to go back. It's, it's definitely interesting.
Hey Matt, are you cool with the title? I changed the title of the room. We got rid of the Degen moniker.
Oh, I don't care
No,
either way,
Matt.
but
So
yeah,
Matt.
sure.
So Matt. No, in all seriousness. So I put Matt Tuttle brings the heat. Can you please explain your HEAT idea?
Yeah. So, like I said, I'm an investor. I've got my daily newsletter. We're starting up a wealth management firm. The philosophy I use is something we call the HEAT formula. Stands for hedges, edges, asymmetry, and themes. So the idea, very simply, you should always be hedged. I don't think bonds are a hedge. I hate bonds right now, but you should definitely always be hedged. There are edges that exist in the marketplace that, for whatever reason, can't be arbed away. They're either structural edges or behavioral edges. You should look for those and invest in them. Your trading and your portfolio should be designed for asymmetrical returns. Heads, I win a lot, tails, I lose a little. And you should be invested in today and tomorrow's top themes. So that's the stuff we teach. That's how we're going to design portfolios in our wealth management firm. And that's what I write about in our daily newsletter. And that's what I do myself.
All right, excellent. So let's now go to Illini, and then I'm going to get Jeff Garbaz up here. Illini, good to see you. What's up?
Good to see you, George. Hey guys, we've been talking about silver a lot. As a stat arb quant, one of the things that fascinated me was I think silver turned over basically its entire shares out. The SLV ETF turned over its entire shares outstanding on Friday.
Yeah, Illini, let me interrupt for 1 second. Bob Coleman, you just sent me that post. Bob, if you're still there, can or Illini, keep going, because Bob Coleman,
Okay,
I mean,
let me focus the question
yeah, okay, focus,
because
go
I'm
ahead,
going to get to
yeah,
balances
yeah,
question.
go on.
I mean, my question for Bob or for anybody else up here is, if you imagine the commitments of traders report, open interest on the CME dropped a little bit on Friday. I mean, who do you think the buyers are, and who do you think the sellers are in this whole sell off? And where are those? Where is ownership of those bars moving to on a day like Friday, and where's it moving from?
Who's to answer that question? I'm sorry. Who is that for? Is it for Bob?
That would be for Bob
Yeah,
if he's
Bob, are
here.
you still there?
Yeah, I'm sorry about that. Yeah, I'm here.
So Illinois, want to repeat the question again for Bob?
Bob, obviously there was a huge sell-off on Friday. Very heavy volumes in the SLV ETF. Open interest, it looks like declined slightly. Um, who do you think were the sellers on Friday, and who do you think were the buyers?
Well, if you look at like we talked about earlier, these levered 2x funds that had a huge impact on billions of dollars worth of silver futures contracts being sold. They obviously, well, looking at which side of the 2x levered it was, they were obviously huge sellers. But if you look at the overall open interest actually, I was just looking at it here on the silver futures. It went from 156,000 open interest on January 29th and only dropped about to 147,973. So roughly about 8,000 contracts dropped on a massive 30% move. So obviously you have forced liquidation, but at the other side of the gamut, and that's the problem with some of these ETFs is you don't know, they're not long-term investors. They're just simply taking position sizes and trading some people were focusing on delivery reports. Maybe I could just kind of go through just a quick fundamental. Um, there's delivery reports that are announced every day via the CME or COMEX, and then there's stock out reports or stock reports. A lot of people are getting the delivery reports confused with the stock reports. Stock reports report the actual physical metal flowing in and out of the registered category and also the eligible category, whereas the delivery reports are just simply warrants trading hands back and forth. So there's really no physical metal trading hands. It's just simply a warrant, that represents the physical, the specific bars attached to that receipt. But that receipt is just trading from HSBC to JP Morgan. So I think what happened was a lot of this forced selling probably captivated shorts have probably covered into that. You had probably these 2x levered funds for sell and like we talked about earlier. But in terms of the actual physical metal, you had 3 million ounces on Friday, which actually is Thursday's numbers. The actual activity was based on, it's a day behind. So 3 million ounces left the registered category on Thursday, and that went to the eligible category, but the eligible category continues to bleed metal. That's just the way things load out the process. It goes from registered to eligible, which basically takes it out of a clearing firm's account that's held, that metal's held on receipt. The receipts are broken, put into an eligible category like a private account, and then from there it's loaded and shipped out. So if you look at the flow of metal, it's been going to London, and I think in identifying the stress points with what happened in October with the tightness and the backwardation and so forth, that got vastly alleviated as a lot of metal was flowing out of New York. So you could make the case that a lot of this metal was going to London, and to alleviate that stress, and possibly this increase in ETF activity in early January, SLV got up to, it was a huge amount of shares outstanding. Well, that's dropped, what, 20 million shares or so, from its highs, 27 million shares or so from its highs. So you have a lot of excess metal now sitting in London that maybe is not tied to ETFs. It's just simply held in authorized participants, allocated accounts. And it's waiting probably for direction. I think your question is maybe more so of, okay, things open up Sunday night. How does the market react? You have, from what I understand, India raised their margin requirements on their futures contracts. You had China increase their margin rates on their futures contracts. So they're trying to take this volatility out of the market. That doesn't mean they're taking silver out of the market, physical silver. They're just trying to reduce the volatility. This is where the rubber meets the road for the silver market itself. You need to start to see people disengage with some of this paper contract stuff and engage in the actual physical metal itself. And I think that's what's going to transpire, because I think most people are realizing, wait a second, I own, you look at PSLV, for example, which is the Sprott physical silver. It's not an ETF, it's a closed end fund. On Wednesday or Thursday, that went to one of its largest discounts to NAV, I think, in its history, went almost 10%. It went like 8.88%. And this is what people don't understand is these ETFs and these closed end funds and so forth are just focused purely on price. And it, not to get into the how PSLV works, but it's dilutive in nature because of the way it does its at the market offerings, unlike the ETFs, which basically have authorized participants that redeem and create shares on a daily basis based on flows of capital going into and out of the ETF. So sorry to get off maybe off the first question, but there's a lot of backdrop here that and a lot of information to kind of
All right.
understand.
That's great. That's really helpful. All right, Bitcoin Tina, hang on. I'm doing this in order. I want to go to Jeff Garbaz, and then we're going to Tina. Jeff, good to see you. What's up, man?
Hey, George, how are you?
Doing great. What's up?
Okay, so the first part of my question is really an answer. They asked, who are the sellers? Well, the sellers are pretty obvious. Those are the people that were making money that all of a sudden the margin changed. And now the second part goes to you directly, which is that we've had multiple changes by the CME, by the COMEX. Friday's change was from a margin on a dollar number to now margin on a percentage basis. And it just looks like the fix is in, from the sting, where they're not going to let the banks go down who are short silver. They got to bring it back in themselves. So, George, the question for you is, this reminds us a lot of 07, 09, where markets were not allowed to trade and not allowed to find discovery. And why was Friday's discussion about, gold and silver moved down because Kevin Warsh is the nominee for the Fed chairman, and we're not going to talk about the margin change? That's what I have for you. And I find it interesting that we're almost an hour and a half into this, and that subject hasn't been broached yet.
No, I completely disagree with you. It was broached at the very beginning, Jeff. So let's go back to Jack. I can answer it, but Jack at the way back when talked about, it's one thing to think conspiracy theory, on the other hand, the market just got extended with itself. And I say it's probably both. I'm going to let Jack rehearse that again, but market got away from itself, got overextended, obviously. And did the authorities necessarily step in to crash it? Who knows? But certainly the point I made in answering Jack, and I want Jack to speak on this. In that is, once in motion, I don't think the authorities were shedding any tears about this. In fact, they want to put their throat on the market to kind of help the price go down. I fully could imagine that occurred. So, Jack, did you want to speak on that point in particular?
Yeah, I could weigh in on a couple of things that were mentioned. First of all, I agree 100% that the move in metals on Friday had nothing to do with Warsh's announcement at the Fed.
Right.
I mean, we saw like a 40 basis point move in the DXY. That doesn't explain a $35 sell-off in silver. So I agree with that. That was nonsense trying to tie the silver sell-off to that. The market was just way, way too over-levered, brutally so, insanely so. And did the CME come and trigger that volatility with the margin hikes? Absolutely. Does that make it a conspiracy theory to suppress silver, or does it make it that the silver market made itself vulnerable to that action? Both, I guess, could be true at the same time. But I'm just leaning towards people got way too enthusiastic about it, and this was bound to happen. Now, Bob, I want to put Bob on the spot also on this subject, because Bob made a really good point that, if we're being honest, some of it went over my head on the live stream on Friday, where he mentioned that these margin requirements are actually creating or even amplifying the volatility, when sometimes the cover story is we're worried about the volatility, so we're going to raise margin requirements. Bob, could you kind of rehash that a little bit?
Yeah, a couple weeks ago, about 3 weeks ago, they instituted a change in policy where they went, instead of a fixed dollar amount, normally on a per contract basis, they moved to just strictly percentages, and so that percentage automatically adjusts. And again, this is the CME's margin maintenance requirements for its clearing members. The clearing members can obviously increase above that margin rate as well. So, they have discretion. But what happens is, if you have a big outlying move, and everything's now based on percentages, and like I mentioned on my thing over the weekend or Friday night, when I posted another change, this is just 3 days after a change of raising margin requirements earlier in the week. It starts to have an amplified effect on whatever side is losing. So all of a sudden, the market goes down 30%. The margin rate is still a percentage of that move. It doesn't necessarily drop like a fixed dollar amount. So the guy that's getting squeezed gets just squeezed that much more. And then, of course, you increase the margin requirements. What was it? You're talking. I mean, again, these are a percentage increase over the percentages, if that makes sense. So you had a 36% increase in the percentage rate of maintenance requirements, from basically 11% you had to put down. Now you have to put down 15% on top of a drop that just happened. So you're going into to Sunday night, and of course, with India raising their margin requirements over the weekend, you're going to get another sort of wet towels type of wrench, I guess you could say, to squeeze out some of the any excess players that are still maybe hanging on by a thread. th- Again, that's attempting to dry out the volatility, but in essence, what it does is it amplifies the volatility
Okay.
because now you're just percentages of moves.
So Bob, let me just follow up so you understand this, and I'll just outline the math. You correct me. If you had $100 silver position, you had to have $11 down margin. Okay, fine. Silver goes from 100 to 65, let's say. All right. You need to have 15% now on 65. So that's like $9.80. Let's just call it $10. So your margin requirement was $11. It's now $10 on 65. However, your equity, if you had $11 of equity in the thing initially, you just lost 35. You're now minus 24. So you got to go from minus 24 to 10. You got to put up 34 just to stay in the game. Is that about right?
Yeah, and now what they did is they just increased that rate again last night, on Friday night.
Right.
That goes into effect tomorrow. So you got
Right.
to pony up even more money.
Right.
And
Right. But the point I was trying to get at is if you had $11, let's assume they didn't even change the margin. Let's just keep it simple. If you had $11 securing a $100 position and it goes down 35, you're at minus 24 in terms of equity. You got to put up $34 just to stay in the game. Forget about before they increase the requirement. So people I need to understand if they had $11 invested, then now you put up 34 more dollars just to stay in the game. If I got that right.
correct.
Okay, fine. And then on top of that, insult to injury, and we're not going to get into between maintenance and initial. Let's just leave that aside. So, as if that wasn't bad enough, they're increasing the requirement from 11% to 15%. So, for a lot of folks, that just has an effect of people just going to get smaller. Is that the way that works? It just exacerbates the decline.
Yes, and this is exactly what is happening with open interest. It's something that a phenomena that's been taken. You have to go back to the palladium market, I think 2017 to 2020 when it started to take off, and all of a sudden you started to see a decrease in activity amongst commercials and managed money because carrying costs and so forth were becoming more expensive. The same thing is happening now in the silver market. Is you have less and less open interest, managed money, long side positioning. You have to go back to December 2024 to see how low actually managed money has been participating in this long move. This is not a move where basically the traditional players were just all in, and you had managed money near all-time highs and commercials near all-time lows on short positions. A lot of that has been cleansed out, and I think raising these margin requirements is part of that cost of carry of doing business on the exchange.
So, one feature of this, so obviously, yeah, in the last couple months since the fall, September, October, uh, SLV kind of became the new meme stock for all the Bitcoin holders, whatever. I'm picking on them because you know what? I feel like picking on them because they just talk smack. By the way, as in a sidebar, I just have to say, if you look at my Twitter feed, some of these, yeah, we've all been around long enough, gotten beaten up enough. Mark teaches you humility. But I got to tell you something. Some of these Bitcoin people, they're just a special kind of arrogant, stupid. I took a shot the other day. I put something I couldn't resist. In one of my rants. And by the way, I have no position in Bitcoin, but I've just been resisting the pressure to buy it, whatever. I said, no, don't buy Bitcoin, buy gold. Bitcoin's not digital gold. And I went the whole spiel about that. So I wrote one of my rants, I wrote, have fun getting poor. Now, anyone who knows the Bitcoin crowd, their rallying cry, they stick in your face all the time. Have fun staying poor. Have fun staying poor. So I write, have fun getting poor. Let's see if you hang on to your Bitcoin. This guy gets butthurt, starts going after me, saying you're a boomer. Oh, my feelings are really hurt. I hope this jackass is in the room right now listening to this because I blocked him. I actually can't because he's blocked. And these people they're a special type of vulgar, arrogant, dumb. It's the kids with the baseball cap on backwards, living in the basement, Dunning-Kruger on steroids, no humility, no manners. We've all gotten beaten up. That's part of getting an education, all right? I don't wish bad for anybody, but all these young, arrogant people, they need to have they should have their heads smashed into the ground. And I'm not gonna erase that. They have no manners. They're ignorant as all hell. They're going to get an education. I guarantee them. It can happen one of two ways. It can be by precept, reading a book, or it can be Mr. Market. And unfortunately, they're all insisting on Mr. Market. So there. Anyway, sorry, I interrupted you. So yeah, no, this is all part of the speculative unwind that we're getting here. And all right, so let me keep moving here. I want to go to Bitcoin Tina, my good friend Bitcoin Tina. Bitcoin Tina, what's on your mind?
Hey, George. This is a question about thematic investing, and I actually have a multi-parter from Matt.
Oh
I own
yeah,
one of your
Tina,
funds.
you got to keep it tight. No filibuster.
No, I will, but
Only I get to filibuster. Nobody else. Go ahead.
no, I'm not filibustering. I really, I own one of his funds. I own EUAD, and I'm really interested in what he does. And this all relates to what he does. So I wish you'd give me just a little bit of room here. And so the first question is on thematic investing. How do you pick the themes, and how do you pick the holdings that populate them? The second one is I own EUAD, and I did not know it was affiliated with T-Rex. I've been on the EUAD site, and I didn't see a link back to your other site. I see you've started a lot of theme funds recently. And lastly, I'm not a fan of the call selling funds. I've looked at a ton of these, and over time they all go from the upper left to the lower right. And it's basically a dollar trading where you are paying your dividends from your left pocket to your right pocket. But I'm most interested in themes. I think themes are really important, and I think that is a really, really, really important way to go. And I'm dying to hear you on themes.
Yeah. And EUAD is affiliated with Tuttle Capital. T-Rex is my partnership with Rex, so that's entirely different. So the way we kind of look at themes is you start off, ask yourself, what are the most likely top themes now and over the next 3 years? Uh, Other things that you should probably do, utilize AI to help you with that. We also will, I'll read all the major financial publications every morning. I'll sometimes throw that in AI, what's going on, brokerage research, throw that in AI. Then also, pay attention to spaces like this, or, the smarter guys on Twitter, the smarter guys in Discords. Once I kind of have the themes I want to look at, then I go through a hierarchy. Number one is, who are the obvious winners? Number two is, who are, as someone mentioned before, the picks and shovels. Who are the companies that the winners need to continue to be winners? Then I want to look at, what are the asymmetrical plays? What are the companies that, yeah, all right, they could go to zero, but they could also 20x. Then I want to look, if you want to look at the short side, who are the losers on those themes? And and that's kind of what we go through every morning in our newsletter. We'll pick a theme, who are the winners, who, on and on and on and on. On covered call ETFs, I agree with you. Covered call ETFs pretty much suck, which is why what we've done is either covered calls 0 DTE, which I think is an entirely different beast, because you keep the overnight returns and every day you can make a decision on when or if to sell a call and when to cover it. And there are ways to significantly put the odds in your favor when you're doing it on a day by day basis. The other thing we're doing on the option side is we're selling put spreads. So you've still got unlimited potential upside. But yeah, I agree. All these covered call ETFs don't make any sense to me.
That's super interesting. So you're different than the other ones that I've seen out there. And that I actually see it says 0 DTE, but stupid me, I have a reading comprehension issue and didn't manage to process that. So I'm really interested in that. Can you tell us the themes you like currently? Because as I said,
Yeah,
and
Bitcoin Tina. If you were listening, he spoke about the European aerospace thing.
I'm in it.
Yeah, I know, but
But
to be fair to everyone else in
okay,
the room, I don't want Matt. No, Bitcoin Tina, listen to me. Listen to me.
Yes,
It's
sir.
about
Yes,
no.
sir.
Listen
Yes,
to
sir.
me. I'm going to block you. It's my space. I don't want you having to make Matt repeat stuff he already said. It's not fair to everybody else in the room. So if you have another question, fine. But he already answered that question.
You got it, George.
Thank you. Hey, listen, guys, we've been on this for an hour and 40 minutes almost. I appreciate Ryan, Bob, Matt, Jack. Any of you guys have any comments you want to make before we sign off here? Anything that wasn't spoken?
I'd just add one thing, based on your rant on the Bitcoin bros, and I think the silver guys could probably stand to hear this a little bit too. This thing ain't a team sport. It's not about our side versus their side. Keep your head. Watch out for leverage. Vertical moves always reverse eventually. So just try to take the emotion out of it.
Yeah, and Jack, in that regard, just pulling a thread further on something we discussed earlier, I think you mentioned it too. We're going to see more corrections, volatility, whatever. Um, the silver thing was really eye-opening, and this actually bears on something Tina was just saying a minute ago about the option thing. If you start thinking about implied vol, what options are being sold for, and the increasing volatility we're seeing, I mean, Jack, don't you think there's a chance for someone to get really hurt here and caught out of position?
Very much so. And again, when you see these volatility spiking and these option premiums going through the roof, the only ones making money are the market makers in that situation because you're overpaying.
Yep.
And we when people overpay, when people don't pay attention to what they're buying and at what price, we get moves like we got in silver. So hands off the panel is my approach at this point.
Got it. So Matt, where can people find you? If they want to get your Substack or get on your website, just tell people where they can get contact details for you, Matt.
Yeah, so it's my website is tuttlecap.com, TUTTLECAP.com. And that's got a list of our ETFs, to sign up for our newsletter, all that fun
How
stuff.
many ETFs do you have and how much you guys managing now?
We have 65 ETFs, I think, and we are 4.3 billion. Hopefully, we are still 4.3 billion at 9:31 tomorrow.
And Matt, just to give people an idea of how you've grown meteorically, like I don't know what the right place you want to compare it to 2 years ago, 5 years ago, whatever, but pick a date and give me an idea of like at that time how big your firm. I just want to get an appreciation for how your firm has grown the last few years. So if you went back X number of years, you were managing Y amount of assets. Like what can you tell us?
Well, yeah. So if you go back a few years, we got up to 1 billion when we were affiliated with a large nationwide network of advisors. COVID blew that
Yep.
up, and we went down to zero. And really, from October of 23, which is when we partnered with the
Mm.
Rex guys to start launching 2X, we've grown to, and at one point when MicroStrategy was killing it, we were well over 5
Wow.
billion. But yeah, we've
Cool.
had some nice growth
All right. Well,
lately.
listen, I really, really appreciate you, Matt, for doing this. I look forward to doing it again with you soon. I think I'm going to be on your show later this week. Jack,
Yep.
always a pleasure. Jeff, great. Ryan, Bitcoin Tina, Bob Coleman, everybody. This has been, Lynn, this has been a fantastic space, seriously. And we seem to have settled into this 11 a.m. Sunday time slot. It works really well for people. I know I got a little bit hot in certain places, but I guess the one message I would leave everybody, making predictions is fraught with risk. Again, to quote my favorite philosopher, Yogi Bear, predictions are difficult, especially about the future. But my personal belief is I think the metals are going much higher, but who knows what they're going to do the next few weeks? I have no idea. I think Bitcoin's going much lower. Life is not linear. I think get out of tech. I think energy's for real. I think the big rotation is on. I think the dollar's going down. I would avoid bonds. But more than that, forget about any of that. You may agree with none of that, all that. That's not the real point. I would ask, and I'm going to close with a question to Matt. I would ask everyone, or Jack. I think you have to, is our Bitcoin friends, you got to zoom out. I think you have to think about volatility and think the unthinkable. That who would have thunk that silver could go down 35% in a day? I think it's a precursor. I think the volatility is going to accelerate. I think you're going to see things which are unfathomable, and be prepared. And I think risk is going to once again become a 4-letter word. And I think index funds, I think are for the birds. So that's it. I don't know, Matt or Jack. I don't know if that closing line for me triggers either of you. You want to say anything, but I would just say be on guard. Jack, I see you got your hand up.
Yeah, I'd just say on Bitcoin, I know we watched a $50,000 sell-off over the last few months, but from a percentage basis, this Bitcoin winter has been particularly mild so far. We still haven't seen any big blow-ups or any big defaults. And the last two Bitcoin winters, it was about 80% sell-offs top to bottom. So, go by those last two cycles, we're looking at a lot of people are going to freak out at this number, but if we match the last two winters, we'll be in the 20s at some point. I'm not
Jack,
saying that,
I
but
agree with you. And the other thing, too, I'd just say lie to that. You see all these, everyone's, the bloviation, the endless calculations. Oh, well, MicroStrategy, they can't go bankrupt because they're perpetuals and this and that. And there isn't a margin call and da 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 da. Everyone's staring at their nables, trying to calculate this to 3 decimal points. And, oh, yeah, it can go down. They won't go bust, blah, blah, blah. I guarantee you, if it's not MicroStrategy, it'd be another one of these Bitcoin treasury companies or somebody else. Somewhere, somebody's going to blow up. And when that happens, you're going to get contagion. It doesn't matter who it is. We can't possibly know who it is, but what's going to hit the fan. And it ain't going to be pretty. So, Matt, I'll let you have the last word. Anything else you want to say, Matt?
Yeah, so a few things based on what you said. I haven't been around as long as you, but I've been around a long time. You will see things you never thought you would see. Number one. Number two, never fall in love with an asset class or an investment. I own some Bitcoin stuff. I have a Bitcoin covered call ETF, 0DT. I own some of it. It's a small part of my portfolio. I'm not 300% levered in Bitcoin, and I'm perfectly happy to sell it if I want to sell it. So, and I think the weird moves we've seen lately in gold, silver, crypto, dollar, what's going on in Japan, on and on and on, I think are telling us something. I don't know what they're telling us, but I would agree with you. I would not be shocked if we see something weird.
Yeah.
At some point out there, and just don't go into. I mean, just don't be massively levered in one area. You're just asking to get your ass kicked.
Well said. And I'll close it out. I mean, people, on the one hand, you say, well, all these older guys, boomer types. I'm older than a boomer now. I'm a senior citizen, I guess. But whether it's Matt or Jack or myself, we're all saying beware, wild shit's going to happen. If you want to get an idea, I mean, if you want to hallucinate a little bit, I mean, for instance, let's take the AI thing. All right. So let's say OpenAI implodes or somewhere this daisy chain and circular financing implodes. Okay. You're going to see in Jack, you got Jack, one more line from you. You got to get, I love this. What's your description of the Neo clouds? What'd you call them?
we work with GPUs.
and
All it
just
is.
and just explain to people, for those that don't get it, your sixth sense of humor. What do you mean by that? It's hysterical.
So we work now defunct. They basically were an arbitrage play. They would either buy commercial real estate or rent it long term, and then they would rent it out short term, and they would capture the arbitrage between the difference. And it was a shit business model, and it failed. And that is exactly what the neo clouds do. They buy GPUs and they rent them short term, and they
Right.
capture the difference. And they all lose money. None of them are profitable. So
There
we
you
work with.
go. There you go. There you go. So in any event, all it's going to take is a chink in the armor somewhere in the daisy chain breaks, and you're going to see a miss somewhere, and then people are going to say, "Oh, so for instance, these neo clouds, all right? I think they're all like you need your head exam if you own any of them." And what's really great about this, again, you can observe a lot by watching. You look at the start of the year, the number of Dunning Kruger summa cum laude graduates who are along this stuff. To me, it's just hysterical, and you know, all it takes is for people increasingly question the AI narrative, whereas before it was innocent until proven guilty, not guilty until proven innocent. The daisy chain financing the break, and people are going to start to say, oh, and so I think the neo clouds will all blow up. I think Nvidia will blow up. All these things. So tech could easily go down, easily. And everyone's pointing to, well, you look at the semis and yada yada, they're different. They're not software. I mean, software, even though it's down. It's still wildly overpriced, and the charts look terrible. And as Paul Tudor Jones once said, nothing good happens underneath the 200-day moving average. So software's a no-fly zone. Crypto, I think, is a disaster. I'd stay away from AI. And I think semis is going to get nailed too. And where I come from, Jack, you're an engineer, but what do the history books say about buying Micron at 7 times book value, Jack?
You missed the boat on Micron. I couldn't tell you what the history book tells you about it, but if you're in Micron, or if you were in Micron already, congratulations, you made money. If you're chasing here, good luck to you.
Yeah. So I think tech, it's fully 30-40% of the market. Forget about that. Consumer discretionary, forget about that. Financials, I think, are increasingly challenged. So, yeah, I mean, you got 50-60% of the market, I think, is dead money. And so what the index does, I don't really know. But I'm highly confident. My highest Sharpe ratio trade is rotation. Probably best expressed as energy over tech. But you could easily see tech blow up. You could see Bitcoin blow up. And by the way, just a sidebar, this crypto thing, I think Bitcoin now, 20 million coins is worth about $1.6 trillion. And you throw the shit coins on, so you're up at 2.5 trillion, let's call it. And people say, well, could this be a systemic threat? Come on, give me a break. I mean, no. The whole crypto thing is only it's not even half of NVIDIA. So it's irrelevant, okay? It's just speculative degens are going to get blown up, all right? It presents no systemic threat. Give me a break. So crypto disaster. So this all feeds into death of speculation. So the democratization of finance, retail, buying the idiot meme stocks, I would short every single one of those. I think you got to buy real companies with real cash flows. And so there's I think meme stocks are dead. I think crypto is dead. I think tech is dead. Bitcoin is dead. Software is dead. So all the stuff that people like to speculate in, and Jack, Matt, I'm thinking of what's his name from Animal House. Niedermeyer dead. All right. So I could see software stocks getting cut in half from here. I could see NVIDIA falling 75% from here. I'm not predicting it, but it's easy to see big ways to lose. And it's hard to see a big way to win. And it's all, at the end of the day, we don't really know. The future's unknowable. But what we can do is handicap risk reward and ask ourselves, how much are we going to make if it goes up and how much are we going to lose if it goes down? And the risk reward's decidedly the wrong way. All right, enough. Almost 2 hours. Jack, Matt, Jeff, Ryan, Bitcoin Tina, Bob Coleman, and whoever else is not here. This has been an awesome space. Matt, I know it was our first date. Will you do this again with me?
Yeah, I'll do this anytime. This was a lot of fun.
All right. Well, if we're not having fun, there's no point. Hey, guys, we'll do this again next Sunday at 11. Everyone take care.